Judy Copenbarger here, and welcome back. I want to clear up a stock market myth today. Are index funds mutual funds? In a few short moments, you'll have a complete understanding of how index funds can be mutual funds, the differences and similarities, and the unique goals each investment strategy is aiming to achieve. Lastly, I'll leave you with some investment wisdom on which strategy might be just right for you. Let's get educated. So we keep hearing about index funds. What are they? Index funds are portfolios. It's a collection of stocks and bonds. They're actually multiple investments in one basket. So this is a basket chosen to mimic the composition and performance of a market index. So imagine the manager is some guy that lives out in New Jersey somewhere. He wears a black suit around and a skinny tie, and his job is to collect the good equities, the stocks and the bonds that will become elements of the fund. He stuffs them all in the basket, and if we own it, we own a portion of everything in that basket. It's all ours. We own a share or shares of the portfolio. These market indices represent a specific industry or a portion of the stock market. So there are currently about 5,000 of these, but you probably only heard of the more common ones. For example, the S&P 500. This is an index that follows the performance of the top 500 companies in the US, and it makes up about 80% of the value of the entire US stock market. So investing in the S&P 500 index fund is virtually the same as investing in the top 500 companies in the US. It's as if you own a proportional share of each company. Way to diversify. As the market rises and falls in price, the fund's value reflects these changes. You could say these funds are automatic. Like they're passive funds, so they reduce or eliminate the management fees, and they carry lower internal costs for you. So are index funds mutual funds? Well, they can be. Index funds can be structured as mutual funds or as ETFs. That's exchange traded fund. ETFs are collections of investments that follow market indexes or indices, and they can be bought and sold just like stocks. Unlike index funds, mutual funds are not passive. They are instead actively managed by a fund manager. And this is that guy in New Jersey we talked about. It's someone or a group of people with stock market expertise who have the role of buying and selling investments, putting things in the basket throughout the day's trading session. The money invested is collected from each of us investors of the fund. When you invest in a mutual fund, you're buying a stake in the company itself rather than actual equity shares of a specific company. The companies are held by the mutual fund, so this is very different than owning a stock or a bond portfolio. So when you're considering each investment type, think to yourself, passive or active? What's best for me? Having a stock market expert managing your investments on a daily basis sounds attractive. However, you may be paying too much for that expertise in the form of higher fees. So these fees can cut into your bottom line and add up quickly. So be careful. This expert fund manager better be worth it, right? Well, all too frequently, actively managed funds are outperformed by index funds. So Judy, why then would I pay for a service that doesn't benefit me? Well, maybe you shouldn't. Think active or passive. The market is so complex that it's extremely difficult for anyone to consistently beat the indices by making individual investments. It can happen, but it has its risks and its costs. So index funds just might come out as a clear winner for you. History proves better returns over time and with fewer fees. This will leave more money for you to put back into your investments for further growth. Investing can be simple and profitable. It all starts by educating yourself on the options available. I'm so glad you're here. So now you know that index funds can be structured as mutual funds, but not all mutual funds are index funds. Please like this video and comment below with your questions, and then share this video with a friend who might want to know what you now know. Subscribe for our latest videos on personal finances. I'll see you next time, and until then, I'm Judy Copenbarger. God bless.